What up, Snake Gang?
Oh, well, what's good there, guys? I thought we were just supposed to just talk.
guys, what's happening, guys? What's happening? Is everybody good? Welcome to our new YouTube
building. Yeah. What's good, guys? What's good? I guess I've got a question, and before we even start, like let's have a young conversation on our own. I want to know, man, like when you're feeling very emotional, like maybe when you cross or whatever, what do you do to calm yourself? What do you do to calm yourself down? You drink,
man, I must drink water to calm myself.
Water?
Yeah, I drink water.
This is Ciroc. What are you talking about? I can smell this is alcohol. This guy.
This guy is fucking around with you, guys. This guy is fucking around with you.
He's drinking Sky right now, and he's telling you guys it's water.
Guys, I wouldn't do that. I bet I wouldn't do that.
You wanna trade sober?
I wanna trade sober, man. Like, if now I'm taking these things, now I'm seeing 2 charts, 3 charts. I mean, I'm seeing other things like blue accounts.
You start barcoding, thinking it's only one entry. It looks like one to you, but
me, I'm barcoding. By luck, I see price going in my direction. I close in, mama, $2,000. I'm like, what the fuck?
Yeah, guys. Even professional traders say by luck. We know that there's a 50-50 chance here. Yeah. When you do stupid things and market proves you right, there you can conclude that. Yeah, there you can see that it's 50-50 no matter what you're doing at the ultimate, yeah.
And I do that quite a lot. Like I just
made a couple of mistakes,
and it will go in my direction like $200 fast. Close.
Yeah, I guess he's lucky that his GJ is correlated with US30.
Yeah,
he's lucky.
When I'm angry, guys, when I'm mad, I drink water just to cool myself down, and then I take a walk. Just feel the nature and just see new things that are just gonna detach myself from the emotions that I'm feeling at that time before I can even do anything like talk. Because like sometimes you can talk things that you really don't mean, but because of you are in that state, then you find yourself saying things that you aren't supposed to say. So I just cool myself, take a walk, and be like, Mamba, cool down, boy, cool down, it's fine, you get it, you got this. Yeah, so guys, that is me. So you say, my guys, man, I'm this person who like to reverse things, guys. I'm reversing this question now. I'm asking doctor, if I can fuck around with you now, if I can mess with you now, what will you do, my brother?
Man, any little money I get,
I'll spend.
Let me pull out my yellow card, guys. Any little money I get, I'm just joking, guys. Money doesn't make you happy. Money doesn't make you happy, but it can do things like for example, maybe it costs money for you to calm down. Like for example, maybe when you cross, you go take a drive and go somewhere and go do something, or maybe you buy something, or maybe there's a lot. I guess there's a lot of ways for me that I can kind of pick myself up or pull myself. But I guess the one thing that I make sure that I'm doing is I make sure I'm distracting myself. Whether you need cash to distract yourself, or whether someone is gonna phone you and distract you, guys, I'll call them back later. They gave me an office phone.
You see those guys from construction? They put their phone up here. That is Tramayne now.
Yeah, guys, let me put my phone here.
Yeah. So basically, so you're saying you take a drive, or
I distract myself. I don't take a drive. I'm still driverless. I'm not driving as yet, but you guys just be patient. On us.
Don't talk about them.
Just be patient.
Don't mention big moves.
Don't mention it. You guys just be patient there. But otherwise, I guess it's just the main thing is just to distract yourself. And then when you come back to the situation, you're no longer reacting to the situation. Now you've given yourself like a gap, like a small buffer. And then I guess when we come back to it, like you said, you end up saying things that you don't want to say, doing things you don't want to do. So when you give yourself that buffer, you get more time to properly respond, and you're no longer reacting to what's happening. So yeah, I guess that's how I manage it, man.
That's an intro for Tramayne. Guys, Tramayne said to you, money doesn't make you happy. Man, you need a lot of money to say that. You need to have a lot of money to say that. Like bro, money makes world go around, man. Like we are all the years struggling and pushing for money. So people can just run away from the fact that money, man, is like making world go around. To get a girlfriend, you go spend, my brother.
Hey, it's expensive to cheat, guys. Be like me and have one. It's expensive to cheat.
Me as well, my brother. I have one girlfriend now. You know, my brother. But let's not talk about that. But guys, today's video, guys, is about market structure. So Tramayne, tell me, my brother, what do you think about market structure? Before maybe we even talk about maybe entries and all those things, how can market structure maybe improve the way you look at the market and all that?
So since we're speaking about money, I feel like for anyone to be able to make that money, the most important thing that, or at least in my own opinion, the most important thing that one needs to understand is market structure. Because I guess market structure will help you make sense of the information that you see.
What if you're recording and then the camera is full, cut full?
Hey, it's tough.
Let me check.
It's tough. Let Mamba go and check there. But nonetheless, guys, what I was kind of saying is that the number one thing is basically market structure helps you understand the context of the market. So you find all of this random crap that's going on in the chart, and then for you to be able to make sense of that information, understand where price is, where price was, and what price is currently doing, you need to understand market structure. I guess that would kind of just be my young. I don't want to give too much now. We're still talking.
I'm not angry, guys, because of I'm drinking this water. I'm just drinking this water. So like there's this confusion, my doctor here. There's this confusion of higher time frame and lower time frame structure. How can you like maybe one separate the two? Because like if I'm on higher time frame, this is what I'm saying on lower time frame. This is what I'm saying. How do you go about that confusion that happens between time frame? Because at the end of the day, you know that this time frame they must speak one code, they must speak one language. They must like complement each other. Like you can't be trading this and then the bigger time frame is saying this and then you are trading this on smaller time frame. How do you go about that process of clarifying that confusion that is there on the time frame difference and structural difference of time frame?
So the number one thing, guys, is that when we're looking at time frames, we need to understand that we get one piece of information from one time frame. I can use a chart pattern on a daily, I can use a chart pattern on a 4 hour, I can use a chart pattern on a 1 hour. But me using those things on each time frame, I'm looking for different pieces of information. For example, I'm using the higher time frame, for example, a daily, to only set a directional bias. No matter whether I'm using market structure, chart patterns, trend lines, Fibonacci, RSIs, whatever, my daily time frame only functions for that purpose and that purpose alone. My 4 hour then would function for me finding things like points of interest and then looking at structure. Where can I trade that directional bias? And my 1 hour or my lower time frame would function for entry criteria. So how I would say is that when you're dropping down the time frames, understand what you are looking for on this particular time frame, and then it's not going to confuse you. The reason why people get confused is because you'll find out that someone is on their entry time frame, but they're still looking at structure to find a directional bias. What are you looking for a directional bias for on your entry time frame? Your entry time frame is there for your entry criteria, not for you to determine which direction you're looking to trade. And so if you kind of just have your I guess just isolate your time frames and understand exactly what information do you need from each time frame, then as you scale down using things like nature's theory, looking for patterns within patterns, whatever, all of those things, you'd find out that the market will then begin to align, because now you understand what you're looking for from a top-down analysis. And then like he was saying, that you wait for the market to sing one song or whatever the case is, you wait for your confirmations on these lower time frames to kind of just align. Point being is that you understand what information you're looking for on your time frames. If price is bearish on your daily and on your entry time frame price is bullish, what are you looking for on your entry time frame? On your entry time frame, you're looking for either a reversal structure to give you a bearish bias setup, or you're looking for momentum in your direction, breaking structure, and then you catch a continuation. Nonetheless, your time frames are singing one song, but still you're not on your entry time frame looking for a directional bias. You're waiting for your entry time frame to agree with your higher time frame directional bias. So it's just being that you know what you're looking for on the time frames that you're looking for.
I think, man, you've just touched my heart. Now I'm feeling like, you see when someone talks something and then you're feeling like
goosebumps,
like those chicken skin.
Yeah, it's goosebumps.
Yeah, that's how I'm feeling now, guys. You know, guys, the thing that Tramayne just mentioned now, guys, is very powerful. If you can take it and go with it home and start backtesting it, like, man, if you have those different time frames, but your higher time frame is the one that speaks louder. Smaller time frame, any structure that is there on smaller time frame can change any moment. But the higher time frame structure speaks louder, has the bigger voice. So you know that whatever that you are looking for on your entry time frame, guys, is just those confirmation, whether it's reversal patterns or what, they change in structure, because we are talking about structure, obviously. They change in structure. Those are the kind of things that we are looking for, but we're not looking for like directional bias. So that's very important to be like, if you're on a daily time frame and you know your daily time frame is the one that determines on where are you looking to buy or sell, then you know when you go to a 15-minute time frame or 5-minute time frame, you're no longer looking for directional bias, but you know you're looking for entries, because of as much as your daily or weekly can say is bullish, but you don't just go to your 15 minutes and start buying or selling or whatever. You still need to get those and confirmation. I think that was very, very powerful, Dr. Tramayne. There, I think that was very, very powerful.
I think I've got a question there, if you don't mind.
Yeah.
So regarding like market structure, what would you think like the key things? Maybe me as a beginner that just finds out about market structure, what are the things that I should be practicing when it comes to me maybe backtesting market structure, or even maybe just in my process? Like, what are the important things that I just need to keep in mind?
That's a nice one. The first of the thing, guys, is to understand the structure, like higher highs, higher lows. Like, is the market making higher highs, higher lows? Okay, so you understand you have an uptrend. Then the second thing you have to understand, you have a downtrend, market making lower lows and lower highs and all that. And you have to understand that you have some sort of like a ranging market. So once you are able to identify those two, then you are like already cool with the market. Then you know, okay, what is that I'm having? I'm having a push to the upside, and then you have a corrective structure, and then we have expansion. Or expansion, guys, is another impulsive move. It's just like another week. But we have another impulse, then we wait for price to pull back into our entry criteria. But one of the most important things that we need to like backtest in structure is understanding, is the price making higher highs, or is the price in a bullish trend or in a downtrend. Then once you are able to identify that with structure, I believe that is the basic thing that you can find in the market, in YouTube or whatever, about market structure, which is higher highs. But then again, you can just know it from like the book, but you still have to like go through backtesting and just do like structural backtesting, whereby you get to see it in the market, because of it's way different from when you see it in the book and when you see it
on the charts or something like that.
yeah, on the charts. It's very, very different, guys.
This guy's attention span.
This like guy who's behind the camera is messing with us. But
please ask Sbu to host the session. Thanks. Sorry about that, guys. So we're basically just being asked, it's time to host our morning session now. You know, in the building, work never stops. Yeah. So what we're just doing is just asking the other mentors to just kind of step in while we're having a discussion with you guys. But I guess just to add on to your thing about understanding like trends, ranging markets, those types of things. You know, those things are so basic that people underestimate how powerful they are. That people stop even like looking in, like, you know, I'll be on YouTube and I'll learn, okay, higher highs, higher lows, lower highs, lower lows. But I won't go as far, because I underestimate the power of just that basic thing. I won't go as far as like if someone just throws a random chart at me and asks me, what is this chart doing? And it just looks random. I won't go as far to say that, okay, cool, I don't see lower lows and lower highs. I don't see higher highs and higher lows. So price is neither in an uptrend nor in a downtrend. Therefore, it's moving sideways. You know, people don't even go as far to make that next connection, because they just think it's so basic. I'm just looking for what they taught me in the course, that if it's higher highs, higher lows, uptrend, I must follow the trend, I must do this, I must do this. They don't go as far as to say that, man, this concept is so deep, I'm gonna go further and see how does market structure change from a daily or whatever. What are the internal structures that I find there? How are the smaller trends doing in the bigger trends and in this trends? And just something so simple as just observing trends could change the dynamic of your whole trading, because now you understand what phase is the market in, what conditions am I trading, am I moving, am I stalling, am I moving slow, am I consolidating, am I moving fast? You understand that. You know exactly which directions maybe you should be trading, maybe even if you don't want to take the directional bias of the trend, because it's possible that you can be in an uptrend, higher highs, higher lows, but still have a bearish directional bias. Maybe you're in a bearish flag or whatever on a higher time frame and you've got a bearish bias. It's so possible. And if you don't go as far as to say that, okay, cool, I'm gonna really backtest and I'm really gonna get comfortable with understanding and seeing these things, man, you'll stop by higher highs and higher lows.
And to just add on what Tramayne is saying, guys, just touched me because now he's speaking about understanding the structure. Guys, like I feel like many people get lost in the structure. They fail to identify the long-term structure and the short-term structure.
Yes.
There is a difference between the two, guys. And once you lose that in the market, you already gone with your analysis. Because when I see market making high highs, well, that is just a pullback, and then the market is shooting down. And already you are bullish. You see, you just bullish bias now because of what internal structure is doing, but you don't see the bigger picture, what the market is doing. So, guys, make sure that you look at those things, guys, to like identify internal structure and external structure, like the bigger picture, seeing the smaller picture. If you can capitalize on day trading, maybe against the trend, that's still fine. You can do that based on like maybe whatever that is happening on H4, but longer term, you know that okay, long term, we're looking to like continue being bearish on this or pair or whatsoever. But guys, just make sure, people, that
make sure
that you are able to like differentiate between the two, guys, because you can be lost between the two, whereby you're seeing those structure being bullish only to find it's just a pullback on a bigger time frame. It's not the actual move, you understand, but on smaller time frame looks like it's a move. So yeah, you can day trade it, but you can't swing trade it. Yeah,
most definitely. And I guess that also just, it kind of boils down, like, looking at market structure, you also need to understand like what kind of a trader are you. Like you can't be a scalper and on a Tuesday morning you're looking at a weekly time frame. What are you doing?
What are you doing?
What are you doing?
What are you doing, bro?
Guys, it doesn't work like that. So also, like, the time frames that you use need to accommodate the type of trading that you do. You can't be every day looking at a weekly time frame, meantime you're scalping. And you can't be looking at a 5 minute and a 1 minute and a 15 minute, and meantime you're looking at a daily 4 hour and 1 hour or whatever, or you trading the higher time frames, you're swinging. It doesn't go like that, guys. So kind of get the relevant information. Obviously, like I told you, higher time frame, middle time frame, lower time frame, they each have their own function. I'm not saying use the daily as a scalper for a directional bias, because how would that work? Maybe you could do something as using the 1 hour for directional bias, 15 minutes for a point of interest, and the 5 minute and the 1 minute for your entry criteria. What matters is, like he said, is that the higher time frames sing louder. The higher the time frame you're trading, the more time price has taken to create that candlestick to show you that data. Obviously, that data is more valid than what's happening on a smaller time frame, because price is only showing you buyers were in control for 5 minutes on a 5 minute time frame. But on a 4 hour, buyers were in control for a full period of 4 hours. That information is a lot more relevant. It shows you, it cuts out all of the noise that's happening. And basically, us as traders, we want to trade higher time frame information. But obviously, for us to get those nice entries. And welcome back from the ad break, guys. You know, we in South Africa, we got a lot of load shedding, all those things. You know, the enemy is trying to stop us there, but we're still dropping that knowledge. Nah, I'm only kidding, guys. But otherwise, guys, so basically we're just speaking about the higher time frames and basically the relevance of the higher time frames versus the smaller time frames.
Yeah, guys. And Tramayne was just talking about smaller time frame entries. Those are sniper entries, bro. Those are sniper entries.
You must ask this guy about sniper entries. He'll tell you. Last year he used to dream about sniper entries. This year he says how they are caught.
Yeah, but guys, just to give you a bit of advice, guys, I didn't just wake up and catch those sniper entries. Like, man, I wasn't focusing on sniper entries. I was just focusing on relevant entries, because like, you just started trading and then you're focusing on sniper entries. Just focus on perfecting your entries, and then you look out for those sniper entries just to break and all that. Because at the end of the day, if you're making $1 from a sniper and I'm making $1 from a relevant, it's all money. It doesn't really matter. So yeah.
Can I say the difference? The reason why I'm gonna speak for myself, but I know a lot of people that are gonna watch this also fall in this category. But I'm speaking for myself. Back in the day, the reason why I wanted to learn how to take sniper entries is because I wanted to trade without risk. In reality, I didn't want to have risk. I didn't want to see blue. I mean red.
Yeah.
I didn't want risk on the table. That's the honest truth about why I wanted to catch sniper entries. And guys, let me tell you now, get it out of your head. There is no trade that you're going to take that does not come with risk. And if you start to look at it from that perspective, and then just to focus on how you can find a trade and manage risk well and make something from that risk, eventually you end up refining. The more you repeat your system and your process, the more you refine things. Time polishes you, the market polishes you, and then obviously you get to the point where now you're taking much more refined entries, or sniper entries, if you want to call it that.
Yeah, sniper entries come with a lot of losses though. You
It
can
comes
take
with a lot
like
of
3 losses in like one day, and then that one trade that goes in your direction, just get to like get a lot of reward from that. But we're not there on sniper entries and whatnot, guys. So guys, make sure that you click on the subscribe button, make sure that you click on the like, you drop a comment as well as to what do you think about this video of today, and as well what do you think about what do you do when you're angry, what do you do when the market is killing you or the market killed you, how do you react to that? You don't just take your anger out of on people like kids and all that. Just find a way to like
even
go
on the
around
market,
that.
because the market will burn you more.
It will burn you more, you see. So don't chase your tail, don't try to revenge trade and all those kind of things. Emotion, psychology can mess with you. I've seen that yesterday, but I don't want to talk about it. But then again, guys, just make sure that you subscribe, you like, you drop a comment, and you share this video with your friends at home, because like this information, you don't want to have it alone. You want to have it with your friends. I always say this, you don't want to be at the top alone. Come with your friends at the top, because like you'll always be the one doing things and you'll feel like people are using you, because of you don't want to elevate other people like your friends and all those people. Come with them men at the top, so that you don't feel like you are used to like, so do the things.
I'm doing the things to be done. The things to be done have been done. Guys, thanks so much for watching. Let there be peace in the Middle East.
Let our brothers and sisters be safe. We out.